All right, so my next guest asked today's key macro questions. He says, well, does the Fed still have an asymmetrical dovish reaction function? Also, U.S. liquidity is still on track. Is it still on track to be supported by $800 billion TGA spend down from earlier next year? I want to bring in now 42 macro founder, CEO Darius. So let's take those on one at a time, particularly the Federal Reserve. Have they changed their, there's from yesterday, it feels like a lot of things changed there, but did they really change?
Yeah, they did a little bit. So they no longer have an asymmetrically dovish reaction function. They're no longer itching to ease policy to the extent that they have been for the past 14 months. And that is new, and asset markets need to respond to that.
So it felt for a while that they felt like inflation was going to drift to the target.
Correct.
And they zeroed in on the labor force.
Correct.
Now with the new economic projections, they actually see unemployment lower. So are they back to focusing on more on inflation? Yeah,
well, Chair Powell talked about this ad nauseum yesterday in the press conference about the balance that they're seeing with respect to the risks of their mandate. The reality is now that the Fed has a balanced sort of assessment of its risks, it puts the onus back on us as investors to effectively and accurately forecast where is the labor market headed, where is inflation headed, because then that's where policy is going to be.
And liquidity?
Liquidity. Well, we're quite bullish on liquidity still. This sort of this continuing resolution tete-a-tete that we are kind of all experiencing here as investors today. In our opinion, that represents a slight risk to the lack of a debt ceiling negotiation in the first part of the year. But as long as the Democrats don't extend the debt ceiling or get rid of it altogether during Biden's administration, we're going to have the entire Treasury general account balance get spent down to zero in the first 4 or 5 months of the year. And that's going to be incredibly bullish for assets.
So you're resilient. You see the U.S. economy is still resilient.
Check.
Liquidity. Jay wants a soft landing. Does he want it too much, too badly?
Not as much as he used to. He still wants it, right? This is a man whose legacy is letting the inflation genie out of the bottle. So I think he wants to mop up that dirty legacy and replace it with a soft landing.
All right. So last time you were here, people went crazy. You talked about the fourth turning, and I mean, the phones never stopped ringing, right?
I love it.
So let's pick up on that conversation. I don't know if you heard, we just in this last block, we talked about the Western world imploding. Most of it's based, economic things, but they're really, particularly in Europe. Is that part of this sort of fourth turning thing?
Well, the whole Western world sort of fourth turning cycles are sort of linked now because of World War II as a function of the previous fourth turning. And so for those who may have missed our last segment, what the fourth turning is a regime of great institutional and geopolitical change. And we're in one of those regimes right now. And the reason for that is because people are pissed off. They know the system isn't working for them, and they're hiring people like Donald Trump and Elon Musk to come find solutions.
And this is what happens during that, right? You get more fiscal support, policymakers, you get monetary debasement, fiscal repression, financial repression, rather. Oh, is this good or bad, though? Jim Grant was on yesterday talking about this as well.
Well, it's great if you're a rich asset holder. It sucks if you are not a rich asset holder, and this is why we continue to see so much political volatility, not just here in the U.S., but also around the Western world, because everyone is starting to figure that out.
So if you're not rich, then you want to try to get rich, right?
Exactly.
That investing during the fourth turning.
Can I touch this?
Yeah.
This is why this asset class is so important to people my age, the millennials, because they understand that the system is not working for them, and they're basically making a gambling bet on it.
For those who are listening on radio, he just circled crypto. But you're saying, stocks, credit, crypto, commodities, you're bearish on bonds and the U.S. dollar.
Yeah, eventually. I mean, we'll see about the U.S. dollar. If Doge can do what Doge is purported to do, which we have skepticism regarding, however, if it is successful, then we may actually see a stronger U.S. dollar as a function of that. But generally speaking, Treasury bonds are probably going to continue to be the worst asset class in this fourth turning regime.
Great stuff, my man. Great
Charles,
stuff.
Before we go, I got to say, man, I don't think there's a guy on TV or anywhere else that has made more people more money than you have this year. So I want to congratulate you on a fantastic year, brother.
You're making me blush. I don't know if you can tell, but you're making me blush.
Appreciate you, brother.
All right, folks, we'll be right back.
Thank you.
Thanks a lot.